Hello, welcome to the Mr. Mojo Canadian Dividend Stock channel. Today I'm going to present five top utilities dividend stocks in Canada. All of the stocks that I'm going to present are available in the Wealthsimple Trade. So let's start. So the first one I'm going to talk about is the Fortis. I have already talked in another video that how important this stock is. So Fortis is a Canadian based electric uh, electric and gas utility holding companies. And the company segment includes regulated utilities and non-regulated utilities. Fortis serves many different regions, including Arizona, British Columbia, Alberta, New York, Newfoundland, Ontario, Prince Edward Island, and the Caribbean. So this stock has a 47 year of dividend increase streaks, which is amazing. I sure you do would like to add this in your portfolio. So Fortis is one of the few Canadian dividends paying stocks that can be called the Canadian dividend aristocrats. The dividend yield is currently at 3.87%. Gives like gives investor to a good yields. So over the year, Fortis has been able to maintain a consistent and sustainable cash flow. This is quite important in the utility sector. With the streak of over 4 decades of a dividend increase, in addition to attractive yield, Fortis dividend payment can be considered as bond-like, since many Canadians must be rely on natural gas or electricity to heat their home during winter, or use natural gas or electricity for cooking purposes. Like this makes Fortis a very stable stock to own. The dividend yield of this stock is currently 3.87 with a dividend payout ratio of 75.3%. Meaning the 5 year dividend growth is over 5.5% with a remarkable dividend increase streak of 47 years. Fortis has been come out and announced that the company is trying to reduce its carbon footprint and increase its exposure to renewable energy. This is proof that the management has a sustainable future in mind. So this is a very good stocks to buy. Let's go to the next one. So next one is Algonquin Power and Utilities. So Algonquin Power and Utilities is a very diverse Canadian renewable energy and regulated utilities with asset across North America, which is like available in USA too. So Algonquin actively invest in hydroelectric, winds, solar power facilities, and utility businesses such as water, natural gas, electricity through its two operating subsidiaries, Liberty Power and Liberty Utilities. Algonquin Power owns 53 clean energy facilities and has a strong portfolio of wind, solar, and hydroelectric assets. The operation and under construction assets provide the company currently has like 3 gigawatt of installed capacity. Algonquin Power's facilities are primarily located in USA, with 80% of its revenue coming from the USA. The company has also get 4% of its revenue from Canada and 15% of its revenue from other international location. So I pick this one as one of the best Canadian dividend stock because renewable energy is becoming more and more prominent. I particularly like this. Algonquin Power has been actively investing in renewable energy facilities and increasing its renewable capacity through active acquisitions. The dividend yield of this stock is currently 4.56% with a dividend payout ratio of 44.6%. Meanwhile, the 5 year dividend growth rate is over 10% with an impressive dividend asset streak of 10 years. As you can see, like the per share price is currently 18.61, uh, which is like relatively lower than the expected, and so it's the right time to buy this one. And the current dividend quarterly they are paying at like 1.64 Canadian dollar with and the payout ratio is 13.51. So this is a very good peak, I believe. Next one is Brookfield Renewable Energy Partners, and so this operates one of the world's largest publicly traded renewable power platform. Its portfolio consists of approximately uh, 21,000 megawatt of capacity and nearly 6,000 generating facilities in North America, South America, Europe, and Asia. This company is global leader in hydroelectric power, which comprise approximately 62% of its portfolio. It is also an experienced global owner and operator of an investor in solar, wind, distributed generation, and storage facilities. The company investor objective is to deliver a long-term annual total return of 12 to 15%, including annual distribution increase of 5 to 9% from organic cash flow growth and project development. It has an established track record of creating value by prudently acquiring, building, and financing assets, actively managing its operations. So I like Brookfield Partners because I think there is a lot of future growth in the renewable space. The share price has dropped quite a bit in the last few years, so this may be provide a long-term investor with a good opportunity to purchase the share with a discount right away. Uh, so the next one I'm going to talk about is the Capital Power, and the Capital Corporation is also a very renowned stocks. So uh, the the corporation owns a general portfolio of natural gas, coal, wind, solar, and solid fuel energy assets, representing over 600 and say 6400 megawatt of general capacity. The Alberta-based company has operation in US apart from Canada. It sells electricity and natural gas to industrial and commercial customers, government-owned entities. That it's it. And Capital Power's market capitalization stand at 4.98 billions, with about 115 million outstanding share. Its share price closes at 42.67 on October 26th, 2021. So the Capital Power stocks rose about 46% in the last year and is presently ranked among the top performing utilities companies on the Toronto Stock Exchange. The dividend yield of this stock is currently 5.13%, with a dividend payout ratio of 130.5%. Meanwhile, the 5 year dividend growth rate is about 7%, with an impressive dividend increase streak of 7%, 7 years. Capital Power generated net operating cash flow of 206 million in first quarter of 2021, as against of 103 million in 2021 first quarter. Its net income was 101 million in the latest quarter, while its total revenue were 554 millions. Therefore, I would expect Capital Power Corporation to continue raising dividend for years to come. Uh, and one of the important thing is that the payout ratio 25.42 is not that high, so we can expect that the price will go, or the share price will rise again in the coming days. Uh, and the next one I'm going to talk about is Brookfield Infrastructure Partners. Yes, this is the second one from the second same group. So Brookfield Infrastructure Partner is one of the largest owner and operator of critical and diverse global infrastructure networks, which facilitate the movement and storage of energy, water, freights, passengers, and data. It is one of the largest global infrastructure companies in the world. The company's objective is to generate a long-term return of 12 to 15% on equity and provide sustainable distribution for shareholders, while targeting annual distribution growth of 5 to 9%. Over the last year, Brookfield Infrastructure Partner have acquired high quality businesses on a value basis and opportunistically sells asset to reinvest capital into the businesses. For example, recently BIP show an opportunity and offer to buy Interpipeline. So BP currently has over 95 billion of assets under its management, including 6.6 million electricity and gas connection, and 16,500 kilometer natural gas pipeline, and 2,000 kilometer of electrical transmission lines. The company serves about 1.6 million residential infrastructure customers. To increase its growth, Brookfield Infrastructure Partner expanded it into data infrastructure and owns 900 and so now 9,100 multipurpose towers and actively rooftop sites, 52 data centers, and over 20,000 kilometer of fiber backbone. Just like Brookfield Renewable Partner, Brookfield Infrastructure operate in a limited partnership, and along with like BIPC, the Class A economic return equivalent to BIP unit is like quite high. However, BIPC shares should have a slightly higher price premium over BIPC.UN due to the more flexible corporate structure. So this is also a good one, I believe. Now coming to a very special mention, which is Enbridge. So Enbridge Corporation, this oil and gas company is the largest energy distribution in North America. Its own it's an extensive network of pipeline across North America and the Gulf of Mexico. It is Canada's largest natural gas distribution and collecting, transporting, processing, and storing oil and gas company. It serves 3.7 million customers in Ontario, Quebec, New Brunswick, and New York. Enbridge has had a very generous yield, 2 consecutive years of dividend growth, and a 10 year CAGR of 8.96%. But it also facing some uncertainty surrounding the energy sector. The company has most extensive oil pipeline network in the North America, but the sector may look quite different in 2 decades. So it is one of the riskier long-term bets here too. But based on its reputation and dividend increase every year, dividend stick ratio, it is one of the very good stocks I have mentioned. Uh, the past stock price as of now is 51.84, and with a annual dividend distribution of 3.34. Uh, the market capital of this company, like Enbridge, is humongous, which is 104.74 billion, with a payout ratio of 17.31. So thank you for watching the video, and please subscribe to the channel. And if you want to buy them or open an account in the Wealthsimple Trade, then you can use the promo code given in the description. Thank you.